Hi, welcome to lesson 1 of this course. In this section, we're going to talk about compounding. So in the previous text, hopefully you have read about how you could achieve a better retirement. And to do that, you will need to somehow gather up $1.2 million, or actually $1.23 million according to the text. So let's think about this for a moment. Can you really save money to get to $1.2 million? Let's say you're able to save $10,000 a year, and that might not be possible for everyone. $10,000. It's not an easy task. If you save up $10,000 and you work 35 years, and so you save up $350,000. Yes, you might have some interest from banks, but how much will that give you? I would say that's probably at most another 100K, but that would still bring you to 450K or 450,000, and that is still 3 times less than the $1.23 million of retirement goal. So the way to do this is really through investing, and you want to invest at a higher rate of return. And when you invest, what you're really doing is you're doing compounding on your capital. So in the next slide, we are going to talk about the power of compounding. To illustrate the power of compounding, I have the stock price of Apple here. You can see that in the early 2002, Apple price was probably less than $10. Okay, so if you bought it at 2002 and you just kept on holding it, your stock price will now be $219.57. That's almost $220. This is a phenomenal amount of money. And what you notice here is this growth is actually exponential, right? It's growing exponentially. And that's why investing in the long term is so powerful. You might get a lot of up and downs, but eventually it keeps on growing up. And I believe that as human beings or people run their company, a well-run company will always strive to do better, and that's why you see this type of exponential growth. And this illustrates the power of compounding. When we talk about compounding, you have to think about exponential growth. A lot of other stocks will have a similar compounding effect, but some of them grow faster, some of them grow slower. The Apple stock is one of them that actually grows faster, right? So in the next step, we are going to take a look at how much return do you need every year to achieve the goal of $1.23 million. And this is regardless of your income. If you make less, basically what you have to do is you have to invest in stocks that have a higher rate of return. And if you have more money, then obviously you can go a safer route and you can invest in things like an index fund or an ETF that has a mix of bonds and ETF. Sorry, a mix of bonds and stocks. Okay, so we are going to use this calculator here to help us calculate the return that we need to achieve our financial goals. Okay. And I apologize that I actually opened earlier. I probably did not need to click that, but that's okay. Okay, so here you have your target. This is your financial target, and it is at $1.23 million. The starting amount is zero, meaning I assume that you don't have any initial capital to invest in. And this is your investing time horizon. Let's assume we're going to invest for 30 years, which is quite common. Let's say you're 30 years old and you start investing every year, and you should be able to do that for 30 years, right? You can save money and put it into your investment account. So I'm going to assume that you don't have a lot of money and you can only save up $400 every month, and you can use it to buy some stocks, right? So we're going to hit calculate to see what is the annual return required to achieve this financial goal of getting to $1.23 million. Here, it lets you know that the rate of return that you need is around 12%. So let me give you a flavor about 12%. Is that hard to achieve? Is that easy to achieve? 12% is actually not that hard to achieve because the S&P 500 index returns around 10% on average. And this is accounted for the 2008 drop, the tech bubble, and stuff like that, right? So it's not that hard at all. So you can actually just keep on buying the S&P index fund, and you will almost get close to $1.23 million. Close, but not quite. And one of the important things to note that if you can bump this up to like 15%, your ending balance, or your the amount that you will get 30 years later, is going to vary greatly, and we'll see that later on. But let's take a look at this graph here, just to give you a sense of exponential growth or the power of compounding. So you can see that because you're saving $400 every month, this light blue line is your principal, and those are all the money you have put in over a numerous years. This is the money that you have put in over 30 years time, right? So it is around, so this is your principal, it is around $140,000. Actually here, sorry, $140,000. This is quite amazing if you think about it. You put it at $140,000 and you get 10 times the return, and all you need is 12% return every year. So when you look at this graph, great, you know, I have put in $140,000, but my interest, which compounds over time, grows exponentially, and this is due to the compounding effect. Okay, so in order to achieve this $1.23 million for retirement, the only real way that you can achieve that goal is to continuously put in $400 and make sure that you earn at least 12% return on average. Now, some years you may earn 5%, some years you may earn 20%. That's fine. What you need to achieve is an average. You need an average of 12% every year. So there are other calculators here. You know, there are calculators to help you calculate the end balance. So this is using 8% return. You can see that when you use 8% return, you only get to $500,000. It makes a big difference when you make it to 10%. You see, at 10% you get $300,000 more. So that's why this return, this average rate of return, is very important. So there are other tabs here that you can play around with, and you might need to use some of these calculators, other calculators, to actually do the exercise. I want to go back to the rate, or the return rate here, to calculate the return rate. Let's say, you know, you earn a little bit more and you can save up to $800 every month without any problem. So let's do a quick calculation and see how much return you will need. So because you are able to save more, you only need 8.4% annual return to achieve $1.2 million. So this basically means that when you invest more, you will need to take on less risk. Okay, so if you invest less, then you have to take on more risk and to find higher returns. But I personally wouldn't worry too much about risk. because over the long run, if there's a risk and it occurred and it dropped 50%, 2-3 years later it will go back up, and then it will continue to rise again. That is just the nature of investing and compounding. So I think that's all I have to offer. I hope that you understand the basic concepts, and I hope that you will use this calculator to formulate your own strategy of getting to your retirement goals or other financial goals, anything that you're looking for. So that's all, and I hope to see you in the next video.